Hello, hello. Welcome to Canadian Money Talk. If you have any questions about personal finance, Canadian investing, American investing, let me know. I'll try to help. Hope you're having a good evening. Oh, and gone. Hello, hello. Welcome to Canadian Money Talk. If I can help with anything, personal finance, investing, let me know. How to get rich. Rishu says hi. Hi, Rishu. How are you? Oh, good morning. Okay. So I'm in Canada, in Edmonton, Alberta, specifically. Okay, so you must be in India. We can talk in general about investing in personal finance and stuff, but like taxes and obviously stocks are local. Um, yeah, let me know if I can help with anything. Uh, I cannot talk in Hindi. I think the other people would have trouble understanding me, even if I could, and I certainly cannot. Peppercorn says hi. Hello, Peppercorn. Anything I can help with? Personal finance, Canadian investing. I can look up US or Canadian stocks for you. Give my opinion on the US tariffs, which may or may not happen. Um, whatever you'd like. The whole TD and BCE seem to be a popular topic as well, but Rishi says, can you do this video in private, please? Not right now. If you want to set something up, go to CanadianMoneyTalk.ca. There's ways to contact me, or CanadianMoneyTalk@gmail.com is my email address. We can set something up. I do mentor people, but I charge for my time though, so I'm not sure if you're interested. Arthur Morgan says hi. Hello, Arthur. Hope you're having a fine evening. If I can help with anything, personal finance, how to achieve financial independence, I can look up stocks for you, Canadian, US, whatever you'd like. Yeah, anything I can help with, I'm happy to. No thanks? Okay. You joined my you joined my live. I didn't come after you. If you're not interested, it's all good. In fact, uh, Rishu, yeah, I mean, don't give away your social insurance number or whatever the Indian equivalent is, or your address or anything. But I mean, whatever you want to share is fine. Um, I post my net worth and so on, but I know not everybody's like that. So, um, yeah, Peppercorn. I, sure, happy birthday, but the odds of it actually being your happy birthday, um, I have to say, everybody who joins, every second person has their birthday on that day. So I'm not quite sure why that's interesting to people. Um, I can help you make money, and people seem to be more interested in screwing around. But anyways, hello, Jack. Sorry, I ignored your hi because hi, hi, hi. Okay, I think we established that. Okay, well, then happy birthday, my friend. Okay. Well, it's never too early to learn about personal finance and investing, but I think you have to be 18 to start investing, and generally you have to have a job to make any money. But fair enough. Ask your parents to teach you uh, how credit cards work and all that. 11. I have had some young people on, but I mean, I want to teach in school, but that's for grade 12 or, like roughly 18-year-olds, because they have TFSA room and likely some income, and considered adults. They will make decisions that will affect their lives. So that's where it becomes pertinent. I mean, at 11, if you have, and I'm only talking about this because nobody else is asking questions, to fill the airtime. But I mean, at 11, and I don't have kids of my own, so that I'm aware of, anyways. So yeah, I mean, you're getting allowance and having to do chores, I guess. Um, your biggest financial decisions are whether to buy a toy or to go to a movie, maybe. I have no idea. Andy says hi. Hello, Andy. If I can help with any personal finance, investing questions, if you're not sure what the difference is between a TFSA and an RRSP, I'm happy to help. It's Canadian centric, but I can look up US stocks for you. Um, Happy to help with anything I can. So yeah, Canadian money talk. Uh, what are the interesting topics? The tariffs that Trump is threatening to put on the whole world, but I mean specifically Canada. I So Proxy Boom says, do you have any advice regarding buying stocks? I mean, how much time do you have? So I'm an investor, not a speculator. Um, so I buy stuff that, like, companies that are profitable. In all honesty, if you're new to investing and don't know how to analyze stocks, then don't do stocks. And from your question, Proxy, it kind of sounds like you're a newbie. What you can do is use something called exchange traded funds, ETFs. They're low fee. They usually just follow some sort of a formula. So there's no human making decisions, which is why they're low fee. You can buy them yourself, establish a discount brokerage account. Wealthsimple is an example. They don't have commissions for buying and selling assets. Um, so yeah, like for me, I like stuff that's cheap. I like stuff that's Canadian because it's tax efficient in my non-registered accounts. Um, so that's sort of high level. But yeah, I like stuff that's profitable. Like I don't do stuff that is speculative, meaning maybe it's a brand new company and they just have an idea. They're not actually making any profits. Maybe they don't even have any sales yet. Those are the worst kind. Those will generally, at least in my experience, those end badly. So I avoid those after learning the hard way, where my money went poof. Um, but yeah, with the ETFs, exchange traded funds, you also get built-in diversification because they, like, as an example, I don't know you, so I can't give you financial advice, nor am I licensed for it. But there's lots of ETFs that track something called the S&P 500, which stands for Standard and Poor's, which is a ratings agency, and they created an index of 500 biggest US companies. And if you're American, you buy that and you're done. Like you don't have to do anything else. For us Canadians, we'll buy that, but maybe we'll buy something that follows the Toronto Stock Exchange as well, that index, and maybe we'll buy something in developed markets, so that means Europe, etc., and then emerging markets, which would be like Eastern Europe and Africa. So that way you're geographically diversified. So that would be my suggestion for somebody who's starting out. I do share my portfolio on CanadianMoneyTalk.ca. Just go to the website, or just the website, I guess, and uh, my portfolio, and there's a spit out once a month of my portfolio. So my TFSA is those 4 ETFs that I mentioned. It's an example. Andy says, what about Dow Jones? That is an index as well. There are certainly ETFs that follow the Dow Jones. Dow Jones Industrial Average is the full name, so it's basically 30 industrial stocks, but you could argue like what I think is industrial. I'm thinking sparks flying, and that's not industrial anymore. It's just 30 companies rather than 500. So it's a little bit less diversified, but it's big companies, so it's certainly something that could work for you. Again, it would be passive. It would just be following that index. Every so often, these indexes get adjusted. Company gets thrown out. Company gets put in, both for the S&P 500 and the Dow Jones. So Peppercorn says hi again. Well, okay. Litago says good market day today. It certainly was. We've had a bit of a. Okay, that's enough from Peppercorn, I think. It was a good day, but like the previous week has been sort of tough. Do you think tech stocks are starting to rise again, or will they go further down in till the end of January? Um, so I don't time the market that way. Uh, it- we humans are notoriously bad market timers. And making guesses at things like that. Like I don't know what the market will do tomorrow. I don't know what it'll be like in a week or in a month. Um, I would give it better than 50-50 chance that it'll be up in a year. 5 years, much better, kind of 80-20 chances that over 5 years it'll be up, and over 10 years, with a couple of exceptions, the markets are always up. So that's kind of how I'm investing. Okay. Um, uh, I own Amazon, Google, and Microsoft shares, and Topicus, which is the Canadian equivalent of a tech stock. So yeah, if you ask me about like the Nasdaq 100, I would be a long-term investor in it. To say what I'll do in the next 2 weeks, flip a coin. I'm not gonna give that a chance. With tech stocks, a lot of it is based on interest rates, both for people borrowing to invest and to buy tech stuff. So in the U.S., the reason the markets have been sort of less than friendly recently has been that they're not going to lower interest rates quite as much as people were thinking, hoping. And so, if that changes, then that would, like if interest rates kept going down more than kind of the 2 cuts that they're expecting for this year, if that were to happen, then I would say, yeah, okay, I'll say that tech is going to go up. But that as soon as that is expected, then that gets priced into the market, and off it goes. So yeah, I'm not sure if that's helping, but like I don't I've never day traded, and I don't really make short-term bets like that. Holy moly, that kid put in a bunch of highs. I hope that was fun for him. Okay. So any other questions? Personal finance. We can look at individual stocks and so on. Um, since okay, let me take a look at Nasdaq then. So I'm going to look at Triple Q, which is technology. I'm assuming you meant American technology. Um, yeah, I mean, even through December, it's been of a downward trend for the Nasdaq, and we had a nice little bump up today. But I mean, the whole month of December, it looks like it had trended downwards, or kind of second half of December. Anyway, oil and energy under Trump. Um, I mean, it's sort of weird. Um, he's not renewable energy friendly. He seems to be okay with nuclear. I don't. I'm not a huge believer in nuclear personally. I think eventually, over a much longer period of time than people think, everything will go to renewables and electricity. Whether cars are going to use the hydrogen fuel cell, you'd have to have very plentiful electricity and cheap electricity in order um, to create the hydrogen electrolysis. I want to say to create the hydrogen for cars. So other than not having to have a very heavy battery, maybe by then batteries will be lighter and cheaper. Like I'm not really seeing the hydrogen fuel cell thing. I think it's going to be just electric cars. But over time, oil is the demand, like peak oil demand is always 10 years out. Like it's hilarious. I've been following the International Energy Agency for a decade, and it's always 10 years out is going to be peak oil demand. Oil demand is still increasing, which I find strange. But it's all about money. It's not about saving the planet. It's like a really nice internal combustion engine car is, or truck even, is 40,000, and sort of medium, not luxury Tesla is 70 grand. So like, who's people think with their wallets? It's not like, oh, I have a 3-year-old car, but now I can buy an electric car. I'm gonna junk the 3-year-old car. No, they're gonna drive it while it keeps moving, and then they'll evaluate. So I think the whole transition to renewables is going to take a lot longer than people think. Um, there will still be a demand for oil. I mean, even just for plastics and so on. But as demand comes down, obviously prices come down. So then the high cost producers will have to drop out. Canada isn't the worst, but it's certainly not the best. Like Saudis are $10 a barrel to get the oil out of the ground. Canadian producers break even at around 30, but there's others that are worse. I'm not answering your question, but there's nobody on, so I've got time to ramble. I hope it's interesting. Um, so, so number one, like Trump is 4 years, right? While this is going to be like a 20-year process while we transition to renewables. You're going to need something that when the wind isn't blowing and the sun isn't shining, that picks up the slack. It's not going to be uranium because that takes way too long to fire up, even if it's like ready to go. It's like a couple hours to get a nuclear reactor producing something. So it might be natural gas, which obviously isn't renewable nor completely clean, but a heck of a lot cleaner than coal. So Trump seemed to be okay with nuclear, He's definitely drill, baby, drill, which will actually increase the supply and bring price of oil down. Because of the tariffs and some of the other geopolitical issues, oil has had a really nice run recently, which I'm not hating because I do own renewables, but I also own a couple of pipelines and two big oil producers in Suncor and Canadian Natural Resources, and then two small ones in Cenovus and what was it? White. Hold on. Whitecap. Um, so I'm good with oil. It's going to be around for a long time. Price might come off. Supply will then come off, which might actually support the price. Um, Trump will be long gone by then. He's definitely not going to help with renewables or any clean anything. So like he might take off the various subsidies that there are for the clean cars, and which will make that even worse. Like the amount of the clean energy cars has sort of plateaued. Like anybody who was going to get one has gotten one, and everybody else is just thinking with their wallets. So if some of the subsidies come off, or they don't get renewed, then that will make that demand worse, which would increase demand for oil some more. So um, I don't think he's going to put, I don't know if you're Canadian or if you're interested, but just because it's Canadian money talk, um, all the tariffs that he's threatening, they may not happen at all. They're just election rhetoric. They could be used just as leverage for other negotiations, such as with Canada, drugs coming across the border, and Mexico, I guess more the immigration. So they could just be used as a threat to make other countries do stuff. China, I think the tariffs there are fairly serious, but I mean ultimately they hurt Americans because they increase the price of whatever goods Americans are getting. And if there's a trade war, if other countries react and they put tariffs on American goods, it hurts everybody and both sides. Like it's not helpful. It's stupid. Um, the thinking is because of the amount of oil from Canada that the U.S. gets, despite their production, they're buying a lot of oil from Canada. There's pipelines set up and all that. It's going to the enrichment plants, I want to say. So there's not going to be a tariff on that. The whole softwood lumber dispute that they have with Canada forever, is another thing that might come back. But yeah, so renewables will probably be harmed under Trump. Oil will the demand will go up, supply will go up. It may not change much in terms of price. So your favorite oil stock is still going to be the same. So, anyways, I think I explored that one fairly well, or at least as far as I go. Um, and yeah, the nice little run up in the price of oil has just been the geopolitical situation and of course the tariff threat, because obviously he could put it on the Canadian oil. It's unlikely he will because it would that would increase the price directly. So yeah, any other questions? Personal finance, financial independence. If you hate your job, how you don't have to go anymore. Save, invest more likely, spend less than you make, and depending on the priority that you put to it, you can be like I stopped working in IT at 46, so a little bit over 20 years of work. Really disliked it and was able to save majority of the money that I was making and invested it. I had a nice run up from 2008 to 2021 basically was awesome, and I retired at 46 years old in 2020. So it's simple. It just really takes dedication and discipline, and just keep investing, keep investing. If you really want to become financially independent, the sooner you start investing, the better. Low cost ETFs are generally the way to go. You can do it yourself. You don't have to get a financial advisor. Would be my suggestion. Okay, here we go. Apple says, if you have $100, what percentage would you invest, keep safe in saving for emergency, and how much percentage for cash and how much for gold or other metals? Okay, good question. So we'll just work in percentages. $100, $100,000 doesn't matter. So before you start investing, you should have 3 to 6 months of spending, basic spending, as an emergency fund. So that is if you lose your job, if the transmission falls out of your car, or if you need to go somewhere, a funeral where you have to fly somewhere on moment's notice, and there'll be, $2,000 flight ticket. So before you start investing, you should have that, because if you do have an emergency and you don't have any cash, you should you would have to sell your investments in order to fund whatever you need to fund. And that would be fine if it had just had a leg up, but if it just went down and you still have to sell it, selling low is kind of the opposite of buy low, sell high. So have an emergency fund. So that's the cash that you're asking about. I personally don't hold cash as an opportunity fund, which is kind of the other thing to hold cash for. Emergency fund, opportunity fund. That's timing the market. When you're holding cash for investing, you're saying, I think the market's going to crash, and soon. One of the guys in the Vancouver Investing Club that I was part of, he has a significant portfolio, and I think last time he said he was like 30 or 40% in cash. So he's waiting, and he's watched 2 years of 20+% per year increases, and he's still waiting. So even if it crashes 30%, which is like a huge crash, it will still be up from where it was 2 years ago. So I don't do that. People are horrible market timers. So I don't hold cash. I'm not a gold believer. Gold, I'm gonna echo Warren Buffett. It doesn't have any intrinsic value. Like, there's nothing that it does other than really high-end electronics and like connections. You don't use it for anything. Jewelry, but that's recyclable. Teeth, that's recyclable. But otherwise, you can't eat it, you can't grow food on it. Its main benefit is that it doesn't corrode. It stays shiny. So I'm not a gold person. You'll have financial advisors who say 5% of my investments are in gold. Okay, that's you, right? That's up to you. It's not my thing. Other metals, if I had to buy metal, and I don't like commodities in general, because it's a world price, and the people who get them out of the ground, they have to take whatever price Like they can't differentiate themselves. They have to take whatever price the world gives them. But anyways, if I was forced to do a commodity, it would be silver because that's actually used in industrial processes and it's used up. While gold is like a 30 by 30 meter cube or something like that, by 30 for a cube. Um, so for me, once I had that 3 to 6 months, and by the way, so like if you have, a government job, a union job, then do 2 months. If you're a realtor and your income is lumpy, then do 9 months of spending. Okay, just if in case you don't sell a house. Once I had that, I would be 100% in equities. Um, if your time frame is at least 10 years, then all equities. 5 to 10 before you need years before you need the money back, or if you really don't like fluctuations, if it bothers you and you can't sleep, then have some bonds for stability. They will be a drag on performance, but they will smooth things out. If you need the money back 2 to 5 years, then pretty much all bonds. And if like a year or two, then term deposits or even a high interest savings account um, for the investments. Then I wouldn't be doing stocks at that point if I was saving for a down payment for a house or vacation or something like that. So Apple, I hope I answered the question. Brain says, okay, what will the TSX going to do on January 20th if 25% tariffs come in? And if so, what security is good to park your portfolio to wait and see? Um, I guess I'll answer the second part first. I don't think they would put anything on oil. So Canadian oil producers would be one. Anybody that's within Canada, so that would be your telcos. They're having issues, pretty much all three of them, but they would be immune to the tariffs. Um, whatever the market expects is the likelihood of the tariffs is what is already priced in, right? So, like politicians in general say lots of things. They could be liars like Trump is, or they could just promise whatever they can to get elected. And then just not do it. So he could have been for Trump, it could just be a negotiation tactic, as I mentioned earlier. Who knows? It could be a bargaining chip where he'll make sure that there's some sort of a tariff because he said there would be a tariff, so he might leave us with a 5% tariff. The worst thing that would happen is if we started a trade war, and like he's trying to do this on the whole world scale, and it would hurt America a lot if all the countries started pushing back and started putting tariffs on American goods. So like it's really complex, but basically it's sort of priced in already. Like if he actually puts it on, um, then yeah, the markets would drop some. But if actually like 20% tariffs got put on, then it would hurt our GDP, maybe put us into a very slow growth. If we started a trade war, then that would cause a recession. And if all the other countries started a trade war, that would cause a recession in the US as well. Plus inflation, and it would hurt Americans. And that would cause interest rates to go back up, and Trump famously doesn't like high interest rates. So maybe somebody will explain it to him. I don't know. So yeah, that's the short answer. Brain. Jojo says, "Are you ready to join the United States?" Brain answered for me, "Nah." Um, it's a joke. Like the man was just flapping. He's just freestyling, just saying stuff, and because of his position, like he's like don't. we're a sovereign nation, okay? We're also part of NATO. Um, so theoretically, the other NATO countries would come to our aid. Um, we're technically a colony of Britain, the UK. So like the king is our head of state. He signs our legislation. So like it we're not leaving. Like it's a joke. The fact of who said it is the only thing why anybody's considering it. It's ridiculous. Um, little bit of pure gold, a little bit of pure gold. Okay. If you don't like the tariffs because prices go up, vote with your dollars and don't buy those products under tariffs. That's really all you can do. Yeah, absolutely. Uh, like the U.S. Imports a ton of stuff from China, which is cheap, both quality and price wise. If tariffs go on to China, it will be the US importer companies that will actually end up paying it, and they will pass it on to the consumer. The consumer says, well, okay, that's now cheaply made and expensive. I'm going to buy something, same thing, hopefully. I mean, if it's available, hopefully. I'll buy the same thing that's American made. It will cost maybe even a tiny bit more, but the quality will be better, supports America, whatever else is important to you, and but ultimately drives up prices. Economics 101, free trade across the world. It is more efficient for people who are able to produce something cheaper to produce it and then even ship it halfway across the world than to produce it in a high cost area. Um, okay. I, uh, so once you put tariffs and other blocks on free trade, it's economically inefficient. Now, obviously, for political reasons, it gets done all the time. I'm just saying it's not efficient. Um, so yeah, if the tariffs get paid by the American people. They're Trump can say he's lowering taxes on corporations who he says, I don't believe it actually happens in reality, that the corporations pass it down to the middle class and the poorer class. They don't. But he's lowering taxes on corporations and his buddies, and then he's going to collect extra money from eventually from American people. They're going to pay for his tariffs, not China, not Canada. Um, so, Brain says, what do you think of Chubb stock? So the searches on my Qtrade account are, so I got CB on New York Stock Exchange. Insurance company, accident, health, reinsurance, life insurance. Okay, so insurance company. What did I think they were? They were like a home alarm company. Anyways, so I'm a value investor, so PE of just under 11, so I'm good with that. I like stuff that's cheap and not pays a dividend. So they do yield 1.36, so not amazing. Funny thing is, Canadian companies pay higher dividends. Like it all comes out of the same pot, so it doesn't really matter. But Canadian companies just seem to pay more. There's very few American companies that pay like 4 or 5%. Anyways, just making an observation. It all comes out of the same money. Like if the profits were reinvested and the share price went up, you might come out better than if you actually get the dividends from the profits. But just saying. So payout ratio is 14%, so that's good. They're well covered. Their cash flow is what, 7-8 times. So the dividend's well covered. It's not huge. Price to book is 1.5. I don't know specifically much about them, so I'm just going to look at the numbers. So stuff I look for is increasing sales, which they are year over year. Profits are a little bit up and down year over year, but positive profits, so they're solidly profitable. Even the last 3 quarters, sales have been increasing. And the last 3 quarters, profits have been increasing as well. Yeah, I mean, for me, because they're American, they wouldn't be tax efficient in my non-registered accounts. But otherwise, I don't see anything horrible about them. Narrow economic mode, according to Morningstar, meaning that they have a barrier to entry for competitors, so it's hard to steal their customers, I guess. While I'm on Morningstar, they think their fair value is 245, so they're sort of at fair value, if not overpriced. Yeah, so they've come off some, but I think they were getting a little bit overpriced. Yeah, if you like them, like you might buy like a third of a position now and see if they go down some more. I don't know how much. Yeah, because they're sort of they've come off. Yeah, I wouldn't say they're going to be a huge gainer from here on, and I certainly wouldn't buy them for the dividend. Brian says, I had a Wall Street guy explain to me once that he sees Canada as a 51st state regardless. Okay. We're in an open market. Americans can buy and sell our stock. Economy is already intertwined. Yeah, fair enough. If you start a company in Canada, one of your exit strategies is to get bought out by an American company. That's fair. Listening to the conservatives, who are pretty much a shoo-in to be in power, and Pierre? Is it Pierre or Peter? I guess it's the same. Yeah, Pierre. He, at least his rhetoric, going back to Trump and actually doing something about it, his rhetoric seemed to be that we want to improve our productivity, and we want to be on equal footing with Americans, which, I mean, absolutely, if we can, but try not to get bought out, like to be able to actually buy their companies, which a few of the Canadian banks and recently a telco bought American companies, but usually it's the other way around. Well, for sure, like if you're living next door to the 500-pound gorilla, like what do you think is going to happen? From media, which we get cheaply because it's made its money back in the US, like the CRTC, the Canadian Communications Board, basically has to mandate Canadian content, because otherwise everything would be American, and Canadian culture, whatever it is, would be gone, right? We would all think as Americans. So you're right. Then again, Americans, and no offense, Oklahoma, Americans don't always think about anybody outside their own countries, so they are only vaguely aware of Canada's existence because we're sort of the polite northern neighbors. Nobody's making their way into the US across our border. And further afield, I think, is even worse. So for simplicity, Brian, your Wall Street guy was sort of thinking of us as an extension of the US, but legally we're different. Pure Gold says, I study economics and Americans are going to suffer more than we already are. Are you suffering? Are you? Have you seen the rest of the world? But that's not just an American issue across the board. Yeah, I mean, God, there's one person left. Okay. Spurs Goddess says UNC. I don't know what UNC means. Like Americans are the richest in the world. Their standard of living may not be the greatest, but that's because of inefficiencies in politics. Like the fact that you don't have health care is atrocious for the most powerful country, not the richest country, but the most powerful country in the world. But pretty much everybody gets enough to eat, right? Like you look at poverty in the developing and emerging markets, like you have no clue, in all honesty. The BFL says, can you buy me a new iPhone? No, I'm doing this video on a Samsung, which a year ago I bought for like $250. So no. Brain says, common currency and easier to work back and forth might be a good idea, like Kevin O'Leary suggested. Kevin says a lot of things. He also said a stock would go to zero because it had a stupid name. So, yeah, I don't like when I was selling my U.S. real estate, like wiring the money arrived. It took 24 hours. Like it arrived 24 hours later. It's a bit of a hassle. It's, as long as you sell stuff in the U.S. only occasionally. I hold U.S. stocks in my Canadian brokerage, and the U.S. dollars are separate. I like the border's pretty porous for Canadians and Americans. Further afield, obviously, it's a bit more trouble. But sorry, I have a dog, and can she open the door? Yes, she can. Okay. Yeah, I don't know if we would want to have a common currency. I mean, being part of the reserve currency would be great. When I was traveling, I had American cash and absolutely no problem exchanging for goods and services. Canadian dollars would have probably been a bit more of a challenge, people looking at the monopoly money. But yeah, it might be easier, but I think I think legally you might not even be able to. I don't know. Nigat says, please share your opinion on Nike going down. Nike, obviously brand name. I know they've had some issues. Like their PE is 22. So for a premium brand, just it's a different thing. I'm just going to look up Lululemon just for fun. Hold on. Kind of same brand name, obviously. PE of 28, but they've had a run up. Yeah, I mean, you could look at it as an opportunity. Analysts are saying fair market value is 86, so that's a solid up. And Morningstar says, I don't own Nike, I don't follow them. Morningstar is more optimistic. They say 112, almost doubling. Um, return on equity of 40, which is great. Anything over 20 is really good. Not much debt. Is it the financials? Yeah, the last 2 years their sales aren't increasing. They stayed flat. Uh, and yeah, solidly profitable. It's just you need, remember, PE ratio, right? You need the earnings, the profits to be increasing, otherwise the share price won't go up. Yeah, so their sales are flat. So I don't know if you're staying on top of them and you know what plan they have to turn things around and to keep the sales increasing. Um, they're profitable, not in like the last 2 quarters, their profits have increased, but I think that caused the bump up a little while back. So if they don't have like a turnaround plan, I wouldn't buy anything. They pay a bit of a dividend, but I wouldn't hold them for that. They definitely feel like they're underpriced, though. Might be an opportunity. Okay. Uh, Spurs Goddess says, I don't think you guys would lose your culture. Arguably, we already have with all the media because we all get the US stuff. Nobody watches Canadian stuff. Um, anyways, every state in America has its own culture. Yeah. Texas is nothing like Florida. Still becoming the 51st state would be very bad for. Yeah, I agree. I like it's not a thing. We're Britain has the final word on all of that. So yeah, it's not going to happen. Like these are just musings. The guy was just spitballing, and he's just kind of talking. He's talking about invading Greenland and Panama. Like you have to have some sort of an excuse to invade. Like you've like they're not going to invade a sovereign. Well, they have in the past, but they had an excuse. Sorry for any of the Americans that are on, but you don't have any idea how the rest of the world sees you. You don't. You don't. When I travel, big hat, Canadian maple leaf, Canada on backpacks, Canada. Nobody wants to be mistaken for an American. Um, anyway, arguably the culture's already gone. But uh, I don't like Canada is also huge. Like I don't want to compare Canada to Rhode Island. So, anyways, Paul is asking about railways. So CNR is one. I don't own either of them. I'm going to look at CNR and CP. Um, I think the issue is just lower movement of goods, shall we say? The tariffs certainly won't help. Like you look at the sales have actually come down from the year 2022 down to 2023. They're profitable. Like when you have a monopoly, it's hard not to be profitable, and their profits are actually increasing. So God bless. So I'm looking at CNR still, Canadian National, but quarter over quarter, if anything, their sales are coming down. Like railways are cyclical, meaning it's okay, babes. She's chewing. Um, railways are cyclical. So especially with the tariffs like that, if that slowed down the economy, like the railways would feel it. Obviously, they have a monopoly. We're not going to build, 100 yards away, another railroad. For me, I never bought into them because they don't pay much of a dividend. With the price coming off, the dividend is somewhat improving. So that's CNR. They're also increasing the dividends. So if you hold it for a long time, yeah, 11% a year for the last 5 years per year. But it started from a very low base. And so then looking at CP, that one more fluctuating, not such a nice downward trend. Where are we here? P of 28. Some debt. Dividend less than 1%. So it's probably going to be something similar with the sales. Well, no, last 4 years increasing. Okay. Also solidly profitable, also increasing. So I like CP better from that perspective. Over the last year, though, over 2024, sales again heading downwards. The price didn't. Yeah, they've sort of been tough businesses for the last year. So Paul is asking, will there be a recovery this year? If we get into a recession and the flow of goods slows even further, So I think the tariffs, like I think the chances of a 20-25% tariff on Canada is like under 10%, in all honesty, right? He could just be sword rattling, saber rattling, I think the term is, for whatever negotiations about whatever porous border or whatever the problem is. So yeah, I wouldn't really worry about a recession in Canada, especially like if we were to fight back and put tariffs on their goods, like it just becomes a downward spiral. So I'm hoping that won't happen. That would really harm the railways. Spurs Goddess says, if they invade you guys, I'll come join y'all and fight against my countrymen. Okay, like that's not a thing. Like Canada's part of NATO, right? Theoretically, the other NATO members would join. Like that, it's stupid. We're giving it way more credit and way more airtime than we should. Like it's just ramblings. Like he was just yapping, just spitballing, just kind of like, oh, and then this and this and like, okay. J-Track says public transport doesn't operate in the black. Yeah, never will. Well, for sure. It's heavily subsidized. It's for the public good. Arguably also for the cleaner environment and so on, so people can breathe. But you're right. But that's hold on. But like the railways are like I'm thinking public transport, like public transit, like in a city, like buses and train, like whatever trains, mass transit. Public transport, like these are publicly traded companies. They're not nonprofits, just to be clear, and they are profitable. So I don't know, J-Trax, if you want to clarify. I think one of us misunderstood. Nigat says oil prices jumped up today. They've been heading upwards. Which Canadian oil stocks do you think will do well and good to hold? The thing is, all of them benefit because they all get the same price per barrel. This is one reason I sort of dislike commodities and commodity producers, because commodity producers are price takers. They're really just competing on cost, but whatever they're getting out of the ground fetches them the same amount as the guy down the road. So all of them should benefit. Um, so again, what I own, kind of the big players, is Canadian Natural Resources and Suncor, and then kind of the mid-size or smaller is Whitecap and Cenovus, and I also have Enbridge and Pembina for the pipelines. There's others out there. I just like stuff that pays dividends. There's others that give you share appreciation instead of the dividends. So yeah, oil prices have been heading up, so absolutely no complaints from me. Interestingly enough, CNQ I noticed was down today. I have no idea why. I also have 60 different stocks, so to keep on minute detail on all of them is more time than I'm willing to donate. Yeah, US, sorry, USD. The oil hit it over 80 today. Actually, pretty much since Christmas, it's been heading upwards. Yeah, no complaints. Brian, I'm gonna call you Brian. What do you think about VXC? Sounds like an ETF. Okay, babe. It's all right. It's all right. We'll work on it. So that's Vanguard Global, all caps, excluding Canada Index. Yeah, obviously, if you have a good feeling outside of Canada, it's going to be mostly US, 63%. Next one is Japan at 5.5%, then the UK at 3.75%, then Switzerland at 2.3%, and then it goes downhill from there. So it's mostly US, which is by market cap. So yeah, like if you think Canada's overpriced or it won't do well from here or whatever, then that's fine. Like I cover the whole world with 4 ETFs, one for TSX, one with the S&P 500 for the US, developed markets ETF, so that would be most of Europe and Japan, Australia, that kind of thing, and then emerging markets, which would be Eastern Europe and Africa and so on. Geographically diversified and non-overlapping. This way, you're basically getting the whole world. You're excluding Canada, which is tiny in terms of market caps. That's fine. Yeah. Like you're still getting the US though, heavily. Management fee is 0.2%, which feels a little high, maybe, but yeah, it's fine. No problemo. It's definitely had a nice run up until start of December or middle of December, and then no Santa Claus rally. Nigat says, what do you think about holding ENS instead of ENB? So ENB is Enbridge. I do own Enbridge. Uh-oh. She dropped it. ENS. Oh, Split Corp. Yeah, no Split Corps. Enbridge pays like a 6% dividend, so like Split Corps are just financial engineering. Don't do it. Don't do it. Some of them last a while. A lot of them don't. They just get delisted and you get whatever it's worth. What's the dividend? Okay, so I've got the wrong one. You're looking for the other one. I got the A, and you're looking for the for the other one. So there, ENS.PR.A, if that's what you're asking, is yielding 6%, and Enbridge, is it? Yeah, Enbridge is yielding, I'm sure, around there as well. So I don't know what the benefit there is. 5.9. So, yeah. Just split share corps. They just like you take part in the down pieces, and you basically just get the dividend. And in bad years, you also get part of the shares going down, and in good years, like the last 2 years, the U.S. and Canada as well did very well. The U.S. had over 20% returns. You don't get that with the split share corps. Don't do them. Is all I can tell you. Okay. Brian says, any other unregulated monopoly stocks you like? Apparently that's a good strategy. Well, yeah. Yeah, if you have no competitors, what's not to like? I would go Google, Amazon, and Microsoft. Those are near monopolies. Arguably the telcos as well. For some reason, competition became fiercer once Rogers bought. What was it? Yeah, bought the fourth one. So that made things more difficult for some reason. You would think that it would make stuff easier. So Shaw, thank you. But the railroads, arguably monopolies, pipelines. You're not gonna get much more pipelines built. Like that just does not seem to be politically viable. Somebody always stops it. Usually they're going to the U.S. or to the ocean. And of course, you're also dependent on what the U.S. government is thinking right at that time. Yeah, so those are a couple. What else am I thinking of? Yeah, like commodity producers, there's absolutely nothing keeping out competition. Lack of money, the cost of building whatever it is, that's not an economic moat. So yeah, there's nothing keeping out competitors there. So that's one of the problems. Marcel says, what are your thoughts on covered call ETFs as a passive income stream going into retirement? Any favorites? No. So I do a little bit of options trading, selling mostly, and I do sell the odd covered call. But if you look at covered call ETFs and you compare their returns versus the ETF that does not have the covered call overlay, like NASDAQ 100, so you can compare them really well. One that has the covered call overlay, one that doesn't. For a year or two, the covered call ETF might do better. If there's like a down market, they still make money. And so they offset the downturn a little. Some, I mean, some of them pay 10%. But over a 10-year period, the covered call ETFs miss out on the upside, right? As the stock gets called away from the ETF. So over a 10-year period, you'll find covered call ETFs are losing 1 or 2% per year to the basic version. Having said that, if you absolutely hate digging into your principal and it makes you feel good to get cash flow, as long as you're aware of this 1 to 2% a year loss, then that's fine. Selling a couple of shares here and there to buy groceries is better over the long run by that 1 or 2%, but do the covered call ETFs. I generally think of somebody doing them if they have like a $500,000 portfolio and they really hate their job, and they just think, if I can get 10% out of the portfolio, I can live on 50 grand a year, and that's what they end up doing. I just do. I am a value investor, so I like dividend payers, but just basic ones. So I'll take the 3, 4, 5, 6%, and my portfolio, I'm lucky enough, is significant, so that I can live off of that more than comfortably. But yeah, it's your choice. You get a nice income stream. If you could put it together out of regular dividend payers, you would also have some share upside. Otherwise, the covered call ETFs, they just stay completely flat, while the regular market is going upwards, and then you're just getting that 10, 12% sometimes. Yeah, I just don't. I've never done one. So, okay, Paul says, have you looked into Sobo? Recently came to market. Yeah, I heard about it. Somebody on TikTok was talking to me about it. Yeah, the TC spinoff. Yeah. No, I haven't. So they pay a hefty yield. Yeah, they've just been on since end of September, basically. 7 billion market cap. Yeah, there's no metrics on them because they've been around for so short a time. I don't know how much of their cash flow is being used to fund that dividend. The thing with pipelines it's not a problem of building them, it's getting permission and like all of the hoops that they have to jump through, and consultations and environmental and because of the distances, like if it's the states, you could have one state that says no, and it's like, okay, that's done. It could be one province. I wonder what the Conservatives and Pierre is going to do, whether they're going to make that easier. Like, I saw a video of him pretty strongly talking, right? Nothing's happening yet. He's not even elected, saying that we're going to make Canada strong again and all that stuff. So we'll have to see. I don't think the federal government on its own can push stuff through, but who's to say? There is definitely a lower price that we're getting because we can't get our oil out of the continent, and we're generally just sending it to the U.S. Like, we need to be able to get it easily elsewhere. So yeah, I mean, potentially it could be good, Paul. Sobo. As I said earlier, I own Enbridge and Pembina, which have both done really well, and I've owned them for ages, and they just kept paying that dividend and increasing the dividend, and God bless. So the other thing is, I try at least a couple of quarters for a new IPO to be live and get some decent metrics and some information before I invest in them. In the past, I got burned by putting money into an IPO that had been on the secondary market for a day or two, and it just went up on sentiment and then did nothing but go down. So I would really appreciate a little bit of history, and if I miss out on some upside, no problem. Okay, Brian says I just talked to a buddy. He exited his Sobo position already. That's I mean, from when they went on the secondary market, which was the public trading, they went basically from $28 and change to 36. So it's not like anybody made a mint. But since then, it's sort of traded downwards, right? They need to start making money, and then I think people will get on board. Marcel says you need to consider total return, quite correctly. Covered call USCL has outperformed VFV. Okay, let's take a look. You do need to consider total return for everything. So like for dividend payers, what's the dividend plus? But then you say covered call ETFs lag the index. So they underperform it, right? Like it's also case by case. I'm not saying 100% of covered call ETFs underperform the regular ETF with no covered call overlay. I'm sure you can find a few. So USCL, enhanced covered call ETF on the TSX. Okay, so we'll compare it to VFV, which is also on the TSX. Yeah, but my friend, Marcel, I said over a 10-year period. I said you can find a year or two, and this sucker's been around for a year. They've got or two. They've got 38% for 1 year. For sure. You can find that. But let's find one that's been around for 10 years and then compare those. That was my point. And it's had no appreciation. Basically, it went from 20 to $24, while the S&P 500 was up 20. Well, it's about the same then. All right. Doggo has exited the room. The USCL also has a 1.25 leverage, by the way, so it's also pumped up that way. It's yeah. I mean that sort of stops being. What's its yield? 11%, but it hasn't. Yeah, so for a year or two, absolutely, but I'm sure you can find ones that even over a 10-year period are fine. I'm just saying generally, and I've done a video about it, and on I think it was a TikTok live, I did just a live comparison with the NASDAQ 100s, and it still came out, but it has to be over a longer period. For sure, total return. You're right, and I'm looking at total return for 1 year of 38.44% on the USCL. I'm just saying they don't generally work out. Covered call ETFs lag the index, so. But if you consider the dividend, it has outperformed. Yeah, so it's that USCL has, but again, over 1 year. Yeah, so the SN, so VFV has done over 1 year. Well, no, my friend, the VFV has done 35% total return, and the USCL did 38. So by only 3%, the VFV has underperformed. And I would argue that over a 10-year period, it would be the other way. The USCL went from like 20 to 24, so about 20%. So it definitely missed out on some of the upside, but then the 11% and change yield added to that, so it came in at 38. plus the leverage, the 1.25 leverage. So yeah, I'm sure you can find one not even over 10-year period, but for the ones I've looked at and for the majority of them, they underperform. Nasdaq and S&P have amazing years. They sure have. TSX hasn't been that bad either. Yet it outperformed the growth index stocks. What stock site are you using? I can prove my point. You're wrong. No. So I'm using Qtrade, which is my brokerage. I just looked up USCL. It says total returns, and it's got 1, 3, 5, and 10 years. Obviously, this thing's only been around for, I guess, a couple of years at most. And it says 1 year total average annualized is 38.44%. So I don't know whether you're looking at the total return since it's been around. Maybe that's 50%. I have since inception cumulative, so not annualized, cumulative, it says 28%. You're obviously invested in it. God bless you, do what you want. Like you're asking me, right? I'm telling you that if you love it, you stick with it. I'm just telling you what I found and what the statistics say. I'm sure you could find one that even over 10 years would outperform the basic ETF. But we're all assuming an upward trending market, right? And if the stock price is here and the covered call is here and the market is going upwards, you're going to miss out on something. Now, whether it's covering, whether that bit is covered by the covered call premiums, the yield, it's hard to say, but generally not. If you found one, let it run another 8 years and then we'll talk. What I'm seeing is not above 50%. I don't know what to tell you. That might be the combined return, even though I have cumulative since inception at 28% here. So I don't know what to tell you. Paul says, anything stand out on your watch list on the TSX lately? So in all honesty, the way I'm accumulating stocks these days is to sell puts. That way I get some cash and then I get a little extra. So when somebody asks a question like that, Paul, usually I read off my latest sells, and I sold a put on Parkland, which is a smaller Alimentation Couche-Tard, and what was the other one? And then Element Fleet Management. I'm sorry, no, Cenovus. I sold a call on Element Fleet Management because it's sort of run up, and I'm expecting it to stay flat from here on out. So I do my own covered calls going back to Marcel, especially when my margin loan has increased because I kept selling puts and I kept getting stuff. So then I turn around and I start selling covered calls for cash and to pay off the margin loan. And just the fact that I have access to cash means I'm getting a nice return. So yeah, Parkland and Cenovus would be my standouts. I'm also on the hook for this Friday for TD, TELUS. Oh, TELUS I already got. CNQ was another one, and Algonquin, which has been a bit of a dumpster fire, but I keep buying it on the way down. And Northland Power, NPI. So let me read that off again. I'm sorry, I was jumping around a little bit. So Northland Power, TELUS, Algonquin, CNQ, Canadian Natural Resources, Toronto Dominion, which has gone up since the bottom, Parkland, which is PKI, and then Cenovus, CVE. I all have puts out on. Otherwise, my biggest single holding is Manulife, MFC, followed by goeasy, which is second tier lender, payday lender, little icky, but profitable. So GSY, goeasy. Then I've got 3 mutual funds. Then we have Bank of Nova Scotia, Royal Bank, another mutual fund, Canadian Natural Resources, TD, which I've sort of been buying with both hands, and Sun Life Financial. Another mutual fund, CIBC, and Element Fleet Management, EFN, that I mentioned earlier. If you wish, of course, I'll have to clarify these things. No, I mean, I broke one brokerage or the other could have it wrong. I agree with you that over 1 year, the covered call ETF you mentioned beat the USCL, that it beat VFV, not by much, at least according to me. My argument is that will happen, especially in a down market. It's kind of interesting that it happened in an up market, but in a down market, share values are going down just like the regular ETF would, but you're getting that the covered calls are sort of going along with it, and they're just producing that extra 10, 11, 12%. So in a down market, covered call ETFs are actually great. Trying to time it and predict that is another trick entirely. So yeah, you'll find that it works occasionally. It's just not over a longer period. And I don't jump in and out of stuff. Like I want to buy, hold, collect dividends, and watch it go up. Like I started buying Royal Bank when it was $70 a share. It's like 170 or something now. And it kept paying dividends all along the way. Like that's all I want. Share appreciation is great, as a bonus. Okay. Marcel says, I'm finding buying individual stocks as you get older is a terrible idea. Buy the index, forget the Canadian market. Fair enough. I actually, hi babe. Excuse me. Oh. Hello. Say hello to 7 people. Mwah. Yeah, I love you too. Okay. Okay, back on your seat. Oh, there you are. All right. Hey. Oh. She wants attention. Apologies. Marcel, you're right. I think in pretty much all cases, whether young or old, if you're young and you don't enjoy it, never mind being good at it, but you don't enjoy it, just buy ETFs. You're all good. You're all good. As you get older, I don't know. Like I sort of enjoy analyzing it. It gives me better control than if I bought like a Canadian financials ETF. I can buy the cheapest bank rather than buying more of the most expensive bank if they are cap weighted in the ETF. The other thing is, forget the Canadian market, as you say. There were years when the TSX beat the U.S. markets. But it hasn't been lately. Like since 2008, the U.S. has obviously a much higher valuation. Experts are saying which year. I think it was actually 2022 that the TSX went down less than the S&P 500, if memory serves. But yeah, our time will come again. I don't know. The other thing is, because I collect dividends, I'm looking for the Canadian eligible dividends and the tax credits, because most of my stuff is in non-registered accounts. And so that's why I go for the Canadian stuff. In all honesty, I mean, I still want good stocks and good returns. I don't want to get great taxes and then crappy stocks. Absolutely. Um, I think the Canadian banks are amazing. They sure take turns being good and bad, and I just keep buying the ones at the bottom of the pile, and eventually they'll transition. I kind of think of it as five guys running one behind the other, and eventually the first guy will trip and be at the back of the line again, and then I'll start buying that bank. So U.S. market, I dislike the U.S. conversion. Not only that the Canadian dollar is weaker, but like the 1.5-2% that banks and brokerages will generally charge you. I used to have investment properties in the U.S. Sold the last one in 2023. Just didn't like. I wasn't much of a landlord. Like they all had property managers, obviously. Um, but like to convert, when I did sell them, or when I had U.S. rental checks, I did buy U.S. companies. I have like a half a mil in U.S. dollars, in U.S. stocks for sure. If I'm going outside of Canada and the U.S., I will use an ETF or a mutual fund, like for emerging markets and stuff like that. I'll let either the index or a professional do the stock picking. But Canada and US, I'm okay with. Um, US every so often sort of scares me, not only with the dysfunction. Sorry if there's any US people on there of the government, the huge debt and increasing debt, um, and re-electing Trump, for example. Like every time I'm just like, can these people be. And kind of funny story. The reason why Trump got reelected was because of inflation. People generally, and I mean, we're talking about 10% that are the swing vote, right? Otherwise, 45% vote for Republicans, and 45% vote for the other party, and that's it for the Democrats. So the 10% basically said, how's my life? Has it improved under Biden? No, it hasn't. Okay, the incumbent is out. If Interesting statistic, only one president in the last 10, or one election in the last 10, I guess it's the same thing, was reelected. That was Obama. Otherwise, it's like, oh, my life sucks. Okay, it must be the government's fault. I expect the government to help me, and they flip it, and it because they promise them, oh, I'm going to lower grocery prices. No, you're not. No, you're not. Nobody is. We might slow down the rate of the increase, but it's not going back to where it was. And again, neither is your salary, right? But you forgot about that. You thought you were coming up in the world until you went to the grocery store. Um, Anyways, so to address Marcel, uh, I do have US. There I look more for capital gains. So not that I exclude dividend payers, but like I mentioned earlier, Microsoft, Google, Amazon, um, those are kind of companies I want to hold for forever. So I do have that, but for tax efficiency, a lot of my stuff is Canadian, and then I'll do the puts and the calls on those. I've never done it on an American company. Uh, and what I'm doing now is I'm just adding. Like I got 60 stocks, few ETFs, and about 20 different mutual funds, give or take. I think it might be a little bit less now, but I just want to add to stuff that I already have, and I do it by selling puts. If I get the stock, I hope everybody knows how puts work. That's sort of my make a little extra cash. Well, last year it was 18 grand. Um, Actually, it was more than I thought. Um, I own a corporation as well, like my own personal corporation. When I was working in IT, that's where the money went, and so that has investments as well. Um, the corporate taxes are being done right now, and actually, for tax planning, my accountant said, "So how much do you think you're going to get in personal taxes as dividends in your personal accounts, and then how much was it in the corporate?" And together it added to $159,000. I'm just like, oh my God, I thought it'd be 120, but now I'm going to get taxed a whole bunch. And then I sold a few things for capital gains. The premiums for the put options are also taxable. So like I've got a 200 200K in income, um, and I'm because it's all tax efficient. My average tax rate is less than 10%. I kid you not. Take a look if you're interested. Taxtips.ca, Canadian. Find your province and find the combined tax table and take a look, especially in the lower tax brackets, at Canadian eligible dividends. Like in BC, and I'm in Edmonton now, but in BC, the first 50,000, if you had no other income, the first 50,000 of Canadian eligible dividends was zero taxes, negative actually. So, like I was expecting to be about 10%, which I still am, to my shock. Um, but like compared to making 200K in a salary or wages, the tax table is definitely suited towards investors. So I would suggest everybody everybody become an investor. Everybody has to start somewhere, by the way. Um, so anyway, and to Marcel's point that he doesn't jump in or out either, that's yeah. I think that's the best way to go. We are terrible market timers as humans, and we're emotional, and so we sell at the wrong time at the bottom after it's been going down. It's just make the pain stop. So buy and hold, and if the story and your belief in the stock hasn't changed, don't let the price influence you. And as it goes down, buy more. If you liked it when it was X, you got to like it more when it's X minus Y, right? So where both of those are positive integers. Anyways, any other questions? It's fairly early night actually. Any other questions? Canadian investing, personal finance, financial independence. I can look up a stock or two for you, give you my opinion. Excuse me. I'm not going to put the dog on my lap anymore because she fell asleep. I took her to the dog park earlier, and in the morning I jogged 5 kilometers with her. So I'm surprised she had the energy that she did. Her name's Goose. Sorry, baby. Sorry. I didn't wake her up. So yeah, any questions? The tariffs seem to be a popular one. I don't think it's unlikely to happen the way he described it. Like he said, 20 or 25% or something. Like he was just talking, just like Canada becoming 51st state and taking over Greenland and Panama. Like just like if it was somebody in a park, you would think, okay, this person's homeless. He's hallucinating, but because it was Trump that said it, it has become a discussion point everywhere. It's just ridiculous. Um, I'm buying both TD and BCE. BCE is going to have a tough road back, but that in my humble opinion, if you buy it now, it's like a 5-year time frame that you need to be holding it. They might cut the dividend. They said they wouldn't increase it. And ask me questions. I'm just filling in the empty air. So the purchase that they made, Ziply, that they made in the U.S. In hindsight, that might be that might turn out to be brilliant, or it could be a total bad idea. But once the immigration numbers came down, the Canadian telcos are not able to grow. They would have to spend a lot of money to take clients and customers away from the other telcos. They needed new people coming into the country, or to be born, whatever. but just on our own, we're nowhere near replenishing the population. We need immigration. Most developed countries are like that. The U.S. is like that. Europe, absolutely. It's losing population, and it's really hard to grow. Um, oh Jesus. Okay, I didn't scroll down. My apologies. Paul, do you appreciate it? I haven't gone into puts and calls, mostly growth and dividends, still learning. Yeah, okay, that's all good. Um, I started learning options in 2020 in the depths of COVID, and like if you think you're okay with stocks, options will just what you can do and the amount to learn. So if you're bored, start learning about that. They can be powerful, but they can also lose you a lot of money. Jack says hi again. Love your dog. What do you do for a living? I'm retired. I used to work in IT, stopped working in January 2020. Run a TikTok channel, YouTube channel, Canadian Money Talk. Also have a website, canadianmoneytalk.ca. I've reached out, I've moved 6 months ago to Edmonton, and I've reached out to local high schools whether I could teach about investing, and nobody's gotten back to me. So I'm not quite sure what to think about that. Marcel says, sorry guys, I didn't see the arrow and the whole bunch of comments. Okay, you mentioned Royal Bank, Marcel says. Okay, it's up to you, but you're no spring chicken. Thanks, Marcel. Royal can certainly come back down to 100. As long as they keep paying the dividend, I don't care, to be honest. My, not to brag, but like my liquid portfolio is 5.6 mil. As long as I'm getting, and I swear to you, I live on 30,000. I have a paid off house, no car. I bike everywhere. I jog. So I'm hoping to be a spring chicken. I'm 51, by the way. How old do I look? Anyway, so as long as I'm getting even 3% dividend yield, as long as the dividends keep coming, I'm all good. There would have to be like a major problem for the banks to do that. I mean, any stock can go to zero theoretically, but just imagine what our economy would look like if there was that kind of a bear market, basically. Marcel says that all you calculated was 5% dividend. I could do even 3. Like off of 5.6, I could do 1% and still live on it, frankly. Like I live on 30 with taxes, 40, maybe 50,000 is my total expense. And of course the taxes are high because I'm getting a much higher dividend. Sorry, I didn't notice the little arrow. I don't, or maybe I'm blind. So retired and you collected a 5% dividend. Yeah, I mean, Royal and all the other banks are also increasing their dividends, which is nice. Juliana Ritter says, yo, what's up? What's up, Juliana? Ali says, are you retired? Yes, I am. I do this for fun and give me something to do. Juliana says, what are you talking about? I'm talking about investing in personal finance, financial independence, preferably in Canada. Marcel says, okay, but regarding taxes only works if your marginal tax rate is low. I mean, I look at marginal tax rates when I'm trying to decide where my next dollar should be coming from. Should it be coming from dividends or should it be coming from capital gains? So like the option selling is premiums, those are taxed as capital gains. what I find interesting is the total or like average tax rate, which for all of the money, because at the beginning it's super low compared to like capital gains, it's super low, and then it increases, and only when you get, depending on the province, about 120, 130, do the marginal tax rates make it more efficient to for the additional dollar to be capital gains. But up until then, the Canadian eligible dividends are taxed very lightly. So, like, I'm interested in the average to know how much I'm going to be paying every year, and then should I buy a dividend payer or should I buy something where I'm expecting capital gains? That's where I look at the marginal. Brian says, how far behind did I get? I'm so sorry, guys. Holy moly. I also go in. Okay, it didn't show up all these. I also ask that you only ask me once. I just go in sequence. You don't have to ask me what I do for a living 15 times. I will eventually answer. Synovus? I swear I didn't see the little arrow about the like it didn't show all of the extra comments. I'm so sorry that I'm suddenly behind. PE is 10. They pay a decent dividend and special dividends. I'm not sure what you're asking, Brian. Its prices sort of come down along with the price of oil, just like most of the other producers. Their fair value is probably in the 30s, low 30s somewhere. What does Morningstar think? One of the things I like about Qtrade, and there isn't that many of them, is that they have good research. Desjardins says 30, yeah. So I'm expecting a little bit of upside, and the dividend keeps happening. Arsalas said, why don't you have US SDRSP? I don't know what SDRSP is. RSP. Oh, self-directed. I do have under Qtrade. I have a U.S. account where they keep the Canadian and U.S. dollar separated. And I linked it up with my U.S. checking account. So when the checks came in, I deposited them in U.S. account, and then I bought U.S. with it, so I didn't have to pay any fees. Using Norbert's Gambit, I will do that on larger amounts, like when I sold a house and I got a check for 300K or whatever US, then I use Norbert's. Otherwise, it took way too long when I was doing it in Qtrade. Like it took a week and a bunch of operations. So it wouldn't be worth it for small amounts. I just kept them separated. My most recent brokerage about 2 years ago was Interactive Brokers, and they actually don't charge you fees, so they give you the real rate. Obviously, we're not getting as much of a bang for our buck today as we used to. But yeah, US though is just it is just overpriced. Like the PE ratio, it's like close to twice the average. Like it keeps grinding upwards. I mean, it can keep doing it for a while, but like eventually there's gonna be something. Jack, I hope you were still still on as far as what I do for a living that I'm retired. Marcel says tax efficiencies in Canadian cash account is only beneficial if you're in a lower tax bracket. Eligible dividends Canadian and cash account with high income will not help much. Yeah, like I said, around 120 is the flip where capital gains become better for marginal rates. Up until then, that 120K is taxed way less if it's Canadian eligible dividends than if it were capital gains. Okay, just Jack, I'm sorry. I'm gonna. There's no reason to do that. I didn't see all of the additional messages drop in. It didn't show the arrow or anything, so I apologize for that. Marcel says, okay, next week let's see if you're correct about regarding Trump. He might make an announcement. They can't implement it very quickly, and like guaranteed there's going to be back and forth and negotiations and stuff. Marcel says, I think he will put a large tariff on Canada. I think he'll announce it, and then there's going to be negotiations. He's trying to prevent one of his things. Like who knows? They all lie, and Trump is worst of the worst. They don't like, was it fentanyl? Some drugs coming across from Canada. So they're going to insist on better policing of the border, and then they could let go of the tariffs. Who knows? Who knows? They're not efficient. And they hurt Americans. Like if he doesn't understand that, he needs a basic economics textbook. Look at first 4 years in power. He said he would put tariffs, and he did. And then Canada fought back, and it hurt both of us. I think he was mostly targeting, and probably still targeting China for the most part. Nagat says it's 6 degrees in Calgary today. It was pretty much the same in Edmonton. By the end of the week, it's going to be minus 20. I still go jogging, still take the dog outside, somewhat against her will, but Marcel says 51. Wow, honestly thought you were much older. Sorry. Still got all my hair and everything. I thought that made me look younger. I bike a lot. I go jogging. Maybe I'm outside, and maybe I need to moisturize. I don't know. Yeah, no problem with the spring chicken. Men don't mind being called old. Marcel says, "Why you have a large amount of equity? Did you say 5 million?" Yeah, if you're interested in what I own, it's on CanadianMoneyTalk.ca and my portfolio. Also my net worth. I publish everything. This sumptuous abode in Edmonton is worth about 450, and other than that, and one piece of art, everything is liquid. When I was working IT, I was making a lot of money, but really hated it. And instead of ending a lot earlier, because you never know how much is enough, I kept going. And now I arguably have too much because I'm not used to spending. Plus, I was born in Eastern Europe, so my family was frugal, or at least my mother was. Brian says, the logic on TD, where do you stop buying? I think you keep buying as it keeps going down, Brian. In all honesty, like TD's not going to go bankrupt, right? Like this is a temporary problem. They're going to fix their procedures, whether they just weren't being followed, it wasn't part of the culture, or whether they didn't have procedures. I still don't know. But eventually the U.S. regulator is going to say, yeah, you're good. You can buy whatever the heck you want. Now you look at Wells Fargo, who've been in penalty box with the regulator for ages. But so what? They're going to keep making money in Canada, and maybe if they realize that they're not going to be able to buy anything in the US anytime soon, they're going to go look somewhere else. But like TD's not going to go out of business. And if it just keeps getting cheaper and it's profitable, keeps paying the dividends, like I'm just going to keep buying them. BCE is a different story. How far behind am I? Okay, catching up. Sorry, I'm behind. I didn't see the little arrow. I just kept yapping about stuff you weren't asking about. Um, so BCE is a slightly different story. That one they could get purchased with, I'm making this up, 60 cents on the dollar of whatever it's worth at the time. So that one might actually end, and then you lose even more money than you already have if you've been investing into it. But like TD, mm-mm. So that one I feel a lot more comfortable with. Marshall says yes, average tax rate is way more important. Absolutely, absolutely. Dimitri, ooh, time to it's time to bow down to Mother Russia. Listen, my friend, I was born in Prague, Czech Republic. We don't like the Russians, and we still remember the time we beat you in hockey back in the 70s or something. Brian says, what do you think Rogers will do with MLSE? MLSE, the Maple. Oh yeah, the thing BCE sold. I don't. I was happy when they sold that, to be honest. So this is the Maple Leaf. This is the sports conglomerate, like a soccer team, right? Was the majority of it. Like that's not a core holding. I don't know about advertising and marketing value, but that's not what you do your business with. Like I was glad they sold it. If they just used it to pay off debt, maybe that would have been the safe thing to do. But then the company doesn't go anywhere. It still has to fight hard for additional clients taken from other telcos. By buying, it could either be a disaster or it could be the move of the century. So we'll see. I know why they did it. For those of you, sorry, I'm going to go lose half of you or more. Those of you who are history buffs, if you remember what Germany did in late 1944, the Battle of the Bulge, that was their kind of last Hail Mary, and for them it failed. But they basically had no choice. They were going to lose the war, or they had to try. So I think this is sort of BCE's Battle of the Bulge. Otherwise, they were just going to keep getting worse and worse. So I don't know what Rogers will do with it. I guess same thing that BCE was doing with it, using it for advertising. Marcel says, if you have 5 million in equity, hopefully it's not mainly held in RSPs. It's not. I had a corporation, and I was only paying myself dividends, so I didn't build up RSP room at all. So I've got like 450 in RSPs, 200 and change in TFSA, and the rest is non-registered. I really need to be tax efficient. With the 450 in RSPs, I am going to start doing the RSP mold down. I was thinking 60. Probably flip it all to a RIF. I'm not going to get any CPP nor old age security. I'm even today I'm making way too much money to get old age security, and I hadn't been paying into CPP for a long time. So my portfolio is the only thing I have. Jag, hi. Question: are the U.S. dividends taxable in TFSA? And so how much percent if someone in 200K income bucket? So anything coming, okay. So good question, common question. Anything coming out of a TFSA is tax free, so it doesn't matter how much money you're making. And congratulations on a nice income. The only thing that happens in a TFSA is foreign dividend payers. They get docked 15% of the dividends. Okay, so it's largely unavoidable in a TFSA. In an RRSP, if you have a foreign traded ETF or a foreign traded stock in an RRSP or US because of the treaty, then there's no 15% withholding. In a non-registered, you will get docked the 15%, but then you get a tax credit at tax time, so up to 16 months later if it's bad timing. But you'll get it back. In a TFSA, do not hold foreign dividend payers. Okay, that's how that works. So the U.S. dividends aren't taxable, Marcel. There's just a 15% withholding. Okay. Oh, I'm up to date. Okay. I'm hoping I didn't lose anybody. So thoughts on REI? Let me answer Frankie here. Unrelated to investing, how do you keep traction on the ice walks in Edmonton when you go jogging? With some difficulty. I try to go somewhere where there's at least a little bit of snow on the ice. But yeah, it's tough. It's not. By the way, Frankie, if you happen to be in Edmonton by the way you speak, I also have a in-person Edmonton investing club. So reach out to me, find me on CanadianMoneyTalk.ca, or email is CanadianMoneyTalk@gmail.com. And if you want to hang out, no selling at all, just like-minded people hanging out once a month, first Friday of the month at a random pub. And we just talk about investing, financial independence. Last time I met with a couple of folks and we talked for 4 hours, or I talked for 4 hours, let's put it that way. But hopefully, people get something out of it, and it's just kind of being able to talk about money in person. We're doing that here as well, but if you happen to be in, I noticed Marcel is in Ottawa, so he won't be joining in person. Okay, Brian says thoughts on REI. So RioCan Real Estate. What are they in? Retail focused. Okay, so yeah. Mixed use, urban, grocery anchored, open air, and enclosed centers. Yeah, retail, much like office, is still a bit of a question mark for me. Looks like they've had, yeah, I mean, really since January of 2022, they've been heading downwards. I mean, nothing terrifying, and they keep paying 6% yield almost. Like good retail, I think, is still a thing, like in great locations and well maintained. If it's a mini mall out in the suburbs that they have, and I don't know what they do have, it looks like you're pretty much just gonna get the dividend from them. You might get some share price appreciation, but not much. So 6% is not bad. So I look at that way. Thoughts on REI? Would you sell this year given rate cuts? And seems like, well, how much debt do they have? For REITs, where most stuff is bought on debt, like, depends how it's financed as well. I have no idea. I don't own RioCan. But if it's variable versus fixed, right? If it's fixed, it won't help that they're cutting rates. Their debt to equity is reasonable. It's under 1, but it looks like they've cut the dividend in the last 3 or 5 years. Their cash flow is $1.54 a share, and their dividend is $1.11. So they're pretty much paying everything they have, which is fairly common for REITs. It seems like it peaks at 25. What would you buy instead for a long-term hold? I've sort of gotten out of REITs entirely. The last one I had was Granite, GRT. see how they've done. And I sold that a couple of years ago. There were supposed to be some tax changes. So they had industrial warehouse and logistics, which I mean, if you include data centers in there, but it looks like they've come off quite a bit. Huh. They're also heading downwards. Also don't have much debt. So I don't own it anymore, but it's sort of in the same situation as RioCan, with completely different set of assets. RioCan though has a much higher PE. Granite is a lot lower, so take a look at that. I guess I would throw that out. So that was, I answered Frankie. Marcel is in Ottawa. Jack says, I have some big lots of GEPQ and TFSA and RSP, hence asking. Yeah, now GEPQ actually doesn't, is it the one I'm thinking of? If it's a covered call, what are they? That's probably a covered call ETF. My God, that's been around for 4 months. Okay, I try not to buy anything that hasn't developed a history. So that's probably, GEPQ is probably a covered call ETF. Doesn't say, but it's paying 10%. So that can't be just like, it's running on top of NASDAQ, so it's not paying 10% dividends. That one, what's coming out of there might actually be taxed. JAG might be taxed as capital gains. So that way there won't be the 15% withholding. So you might be off the hook on that one. Double check, probably Google would do it. Double check what kind of, what you're actually getting paid. Actually, it might be in here. Hold on. No, it's American. It won't. They might be paying capital gains, and that way there won't be the 15%. Marcel says, learned a lot from Adriano since you own GPQ. He often talks about that ETF. Yeah. Listen, covered call ETFs underperform. I've had this discussion earlier. Underperform over a 10-year period. They underperform, like in this case, the NASDAQ 100. It looks great that they're paying 10%, but like you missed out on a couple of great years. And this thing is barely going up. So you might find a year or two where the covered call ETF outperforms, but over a longer period. Remember, we're all here because we're assuming an upward trending market, and in an upward trending market, covered call is here, stock goes up here. You're missing out on this because it loses, the ETF loses that stock. So Marcel, like I'm not a big fan of Adriano's, just because he's actually just started another business. He's actually not retired. He's just doing a consulting business. Okay, I find that fairly disingenuous. It's that PII or whatever, isn't it? Hopefully I'm not ragging on the wrong guy. He's sort of for desperate people who hate their job and have a $500,000, and he, yeah, PII, and he puts them into these covered call ETFs. They get 10% and they can live on the 50 grand. Never mind that inflation's eating away at it, and that if they just ran their own NASDAQ 100 ETF, and then sold a couple of shares as the shares were appreciating, that they would do better. But he's just charging for the consulting, and he wouldn't actually be financially independent. He's just running another business. But they all bill themselves as, that's sort of my pet peeve. Um, they also call people like me the FI police, that you're not financially independent, you just changed jobs. You're now running a podcast and a website. So anyway, just as an aside between me and the 9 people following me, what's the riskiest move or moves you've made and how did it turn out? Um, yeah, good question. Um, like buying the houses in the US after they had their crash in 2008. I bought one per year, um, two in Phoenix, two in Vegas. Arguably risky. I bought them all for cash because they wouldn't lend money to foreigners at that point. Um, I financed a couple of real estate deals on Vancouver Island with a partner who found the houses, and I provided the down payment and a good credit rating for a mortgage. Um, One of them, we subdivided the property, and I just kind of got into the whole development aspect of it, and it was just not something I would like to repeat. And with the amount of money at risk, I mean, it wasn't worthless. Jag, okay, I'm glad you got everybody's point of view anyway. Yeah, you're welcome. I'm always afraid when I get behind that. Uh, it doesn't happen on YouTube, but it on TikTok, which I do the alternate weeks. So I'm gonna do YouTube in 2 weeks, but in a week I'll do TikTok live, same time, starting Wednesday, 6 p.m. Pacific, 9 Eastern, but I stay on for hours. Um, so when I get behind, I'm answering somebody's question and that person's gone, which sucks. So I'm glad Jag hung around. Uh, so the subdivision was we're just dealing with City Hall and with banks. It just that wasn't pleasant. Not that the property was going to go worthless, so it wasn't risky from that perspective. Um, I started diversifying into private equity, which is non-publicly traded stuff. And basically, if things go wrong, you don't know until it's too late. Um, it's also not liquid, so you can't get out. One of them went to zero. A couple of them, I felt that the company putting them on and getting my money just took advantage and just ripped us off. Um, so that private equity just inherently is very risky because there's no disclosures and there's less regulation about it. Really, your only recourse is to go to court. Um, so a couple of them have gotten written off. Some of them did well. To be fair, I gave them 15 grand. They paid me a little bit of cash flow on the apartment building in Arizona, for example, and then they fixed it up, sold it to an investor, and gave me 25 grand back. So I'm like, not bad. So that would be risky. Um, I bought some stocks that I never will again. I bought I mentioned earlier something right after it started trading, and it went up. All the smart money got out, and then it did nothing but go down because they never made a profit. Even worse was those of you maybe heard of it, Nikola, which was the hydrogen trucking company, which didn't have sales, and they were basically trading really high valuations on nothing. They didn't have sales, didn't have profits. They just had a business plan and a dream of a hydrogen network across North America where it's like, are you going to build it? Who's going to build it? But our trucks are going to run on hydrogen. Well, that sounds great. Friend of mine talked me into it. It was just one of the stupidest thing ever, and I sold at a huge loss. Okay, I think that's enough. Then again, I've been investing for 20 years, so all of those happened over time. My riskiest thing would be to start cohabitating with a lady. because that puts you on the hook for half your stuff. I had a prenup, so when we went our separate ways, it cost me a quarter of my stuff, but still probably the riskiest. Any U.S. banks you like? I hold J.P. Morgan. Let me double check. J.P. Morgan is one, Bank of America is the other. So theoretically, I like them. Otherwise, I should be selling them. So yeah, those are the two. Oh, I'm up to date. Okay, not bad. Brian says, what's your methodology to determine your new pursuits as a value investor? What are the 3 to 5 top things you're looking for with respect to individual markers such as PE, etc.? Great question. Shameless plug. I did create a course, about 6 hours of video content, $50, where all the stock analysis kind of pinpoints that I do are covered, plus a bunch more, because obviously I'm doing this very quickly. So it's on CanadianMoneyTalk.ca if you're interested. There you go. PE is probably the biggest one. I like kind of in the teens, 10 to 20 is sort of where I live. If it's in single digits, I'm like, what's wrong with the company? 20 is sort of where I draw the line. 20 to the 40s, if it's a growth stock, Google, Amazon, Microsoft, something like that. If it's a tech stock, I'm okay to pay for it. I sold out of Nvidia as it was going up because it got into a PE of 40s and it kept going up, but I'm arguing mostly on sentiment. So like I have valuations that I need to stick to. Price to book is another one. Depending on the industry, 1, 2, or 3 is the price to book I'd like to pay. I prefer dividend payers, but if they don't pay, it's fine. I look at the payout ratio mostly for the financials, operating income, cash flow for some of the others. Depending on what the company is, you kind of use different things to see how they can keep paying the dividend. I like sales to be increasing and profits to be increasing. It's easier to manipulate profits. You can cut costs, which are maybe, if you're cutting R&D, that's going to hurt you in the long run, but sales are far more organic. So I like sales to be increasing. Economic moat. Is there something that's keeping out the competition? Warren Buffett sort of invented it and Morningstar started using it and or perfected it. So I like at least a narrow economic moat, which means the company is able to keep out competition for 10 years and therefore have outsized profits. Theoretically, wide economic moat is 20 years of outsized profits. I try to have the current ratio, meaning current assets to current liabilities, to be 2 to 1. So if all your creditors ask for their money back all at the same time, they can't bankrupt you. Debt to equity under 1, and a return on equity over 20. They're sort of a sliding scale and a combination of all of them. Like I have stuff that has return on equity of teens, 13, 14, 15. And I'm like, okay, everything else is good. I'll close my eyes on the return on equity. So some of them are fairly hard and fast. So, others are a little bit more soft. There's a bunch of other stuff, but those are kind of the primary ones. Okay, I think you. Odds and Sods says, thanks for the plug for your course. Didn't know, now I do. There you go. Enjoy. I also did a basic one, which is stuff that I wish they had taught us in high school. And that one includes an hour video call, one-on-one, if you're interested in talking about your portfolio, planning, whatever. Um, I wish everybody started investing when they were in their 20s. How much you're investing depends on you and what you want from life and how much you hate your job. Um, but I want everybody to have information. And I don't want people who have no clue about investing in individual stocks, buying individual stocks. Like I talk to so many people. I've been running a YouTube channel for almost 5 years, 4.5 years, and TikTok for about 3.5. And like people contact me, and some of them, if they're where I live, then I'll meet them and so on. But uh, to me, it's just amazing. Like somebody who buys a stock just because somebody on Reddit said to buy it, but has no idea about maintaining it, looking at it, checking in on it, selling it. Just basically somebody told me, and assuming even they were right, not being able to check in on the stock. Like to me, that's just crazy. Just buy an ETF. Get a financial advisor if you absolutely need to. Speaking of which, Wealthsimple, which is one of my three brokerages, no plug, no compensation, but I have over $500,000 with them, and they provide a financial advisor. Um, I I did the whole thing, financial plan. Like for me, I'm not going to run out of money in my old age. There's like no chance under normal circumstances. But like I wanted to know about tax efficiency. When should I try to take CPP? When should I try to take old age security? I'm not going to get either, or not very much. But so that's what I wanted to talk about. She did the financial plan, and I said, okay, I'll see you in a year to update it. And she was like, oh, didn't really seem to want. And it's coming up in February, so I'm already looking forward to it. Um, but yeah, just those of you who want a free financial advisor, it just Wealthsimple will provide that. Francis, thank you for your efforts. You're welcome. Um, gives me something to do, I guess. Yeah, even though I'm just looking to my left here, I've got literally hundreds of books which I really need to read and or reread, and I don't seem to be getting to them. But we'll see how it goes. I'm also hoping, I mentioned earlier, for those of you who are on, I contacted high schools in Edmonton whether I could teach in whatever capacity, and nobody's gotten back to me, which saddens me. Which means, you know, schools are expecting the parents to teach their kids. The parents don't know either, so the kids don't get taught, and the ignorance gets propagated generation to generation, which is just the way the financial industry likes it, sadly, because it makes the money. Um, but the fact when somebody volunteers their time, and the school doesn't even bother with a phone call, like that means that it's the school that's the problem, which I find really unfortunate. So I'm going to try to contact the school district and a couple of colleges to see whether I'll have any better luck. But it's been a little disheartening that even when somebody volunteers their time, I don't know what they were thinking, whether I was trying to sell the kids something, or what. I have no idea. Um, so I'll have to phone them again a month later. I phone maybe before Christmas. I don't know whether that's a busy season. No idea. Anyways, any other questions? I'm happy to do my best. Hopefully this has been fascinating up until now. Investing is actually quite simple. It's just not always easy, because especially if you have to press a button, like depending on your personality, there's always going to be a better thing for your money. So uh, like getting to where I am, yeah, I made good money. The gray hair here was definitely caused by the work, but you can still you scale it down and you do the same thing. You just keep investing, you automate it, and off you go. Brian says another pro tip for you: add Barron's to your tool. It's apparently Wall Bay Street Muse of choice. Good night. Okay, I'll take a look. I I get stuff for free, and between the three brokerages, Wealthsimple has nothing. Like they have no research. You get what you pay for. Qtrade is not bad, and they're the only ones who will take my mutual funds and my corporation. Um, and then I have Interactive Brokers, which doesn't seem to have that much research, but it has a bunch of information. Anyways, Odds and Sods is perhaps if you approach the school for an after school course that might get interest from students. Yeah, absolutely. Like I need to talk to the principal. One of the like when you phone, you just kind of get the front desk at the school, right? And one of them gave me the email address for a teacher who does after school courses with finance. That's sort of all she told me. She gave me the email address. I emailed a month ago and then yesterday, and still haven't heard anything back. So I don't know what um, I'm sure kids are interested. Like it should be required. Like I think some schools just make it part of the math curriculum. Maybe I don't know. But I certainly in grade 10 there was like I sort of consumer. Yeah, it was Con Ed, consumer education. The only thing I remember from that was that when you drive a new car off the dealer lot, that it loses a third, which is on the extreme side, but it definitely loses a bunch right away. Um, and then, like, I've got a Bachelor of Business Admin, and I took a finance course, which was required, and they had one 50 minute course or course class where they went through the ratios for stocks. PE means this divided by this. PB means this divided by this. Straight memorization as far as all the students were concerned, because nobody knew what it meant, how to use it. They just rattled them off, defined them, and that was it. And it's like I don't know what to do. How I got into investing was second job out of university. I was working downtown for a software company at a call center, and a financial advisor held a seminar. Uh, I don't think he just wandered in. He wasn't introduced as being part of the compensation, at least not that I can remember, but he was trying to drum up business. And I was lucky enough that I lived at home for my schooling, had a scholarship, and was able to like I went to school in my town, or in Vancouver or Burnaby. I went to Simon Fraser University, and I lived in Surrey. So I lived at home and even worked a couple of co-op semesters. And so I saved. I remember I had about 10 grand in cash, and I'm like, hey, I could invest. So that financial advisor got me into mutual funds, and they didn't do anything. It was late 90s. I think most of the money, 90s were great, but not where I was at that point. Maybe that would have been 97 at that point. And but the thing was, there were misunderstandings about fees. I think I invested over $50,000 altogether, and then I said, okay, I need that money out because I want to buy a house. So for a down payment, pretty much the whole purchase price actually. And sorry, not the 50,000, but that was part of the purchase price, and I was able to buy the house pretty much without a mortgage. So, but that was back when there was a deferred sales charge, and it hadn't run out yet. and the guy says, "Hey, sorry, this mutual fund's going to charge you 3%. This one's going to charge you 3.5% because of the deferred sales charge." I didn't understand what that was when I was buying it, right? Later, he sort of said, "Well, it wasn't explained to me very well, and I didn't understand." I'm just like, "Yeah, that's fine." There was also some kind of a wrapper. Those of you of a certain age remember that in an RSP you weren't allowed to have more than 20% foreign content. So you were able to buy a wrapper that allowed it, but it was $200 a year. And then the rule came off, so now you didn't need the wrapper. So I'm like, okay, let's get rid of it. Well, but they're going to charge you another $200 penalty to get out of it. I'm just like, son of a, and it was just like $200 was like a couple of days work at that point for me. So I'm just like, okay, this has to stop. And I started learning and educating myself, and eventually I became the finely tuned, financial intelligent, anyways, that you see before you. So like everybody should learn. I don't know where to send you on the internet. Like some people are lying. Anybody who's standing in front of a Lamborghini is an idiot. Anyhow, Frankie says you should teach evening courses at Grant Mac. What's Grant Mac? Can you give me like the real name? I haven't hit any colleges yet. I started with high schools. Colleges are just as good. I phoned 3 different high schools. The front desk people actually seemed encouraging, and then it's like, oh, I'll have my principal call you. I'll have my business manager, which I wasn't quite sure. And then the last one gave me the email to the teacher who was actually running something locally created, and he never got back to me. So I just like, Grant Mac. Okay, Grant McEwen. Okay. I don't know if that was on one of my list of universities, but yeah. I was licensed for mutual funds for about 3 months before I discovered that that I needed to let go of my license. So right now I don't intend to have any license. So I'm not quite sure how that's gonna go, but I haven't even had the discussion. Okay. Public schools have predefined curriculum defined by the government and might be hard to get into. But maybe I'll try through the school district or something. I don't know what they'll do. The thing is, the thing is, you have a status quo, and it's like, you know what? We're not teaching them anything. Hey, we taught them about compound interest in math, right? That's good enough. And money's taboo subject. It should be the parents. Well, the parents don't know either, right? They get taken advantage of by their financial advisors as well. So you need to stop it somewhere. And I'm just trying to make a difference. I don't know, give myself something to do. Whatever you want to call it. I think I would have enough. I would have enough to do all on my own. I don't know about the predefined curriculum. There's always locally developed stuff. I mean, I can do stuff after school. Like I don't know about running, like a full class. But anyways, Brian says Barron's new outlet that Bay Street and Wall Street people read. Yeah, no, I get that. Last funny question: what are the top 3 to 5 things you hated about IT work? What did I hate about IT work? So I worked as a business analyst on software projects for the most part. So I would talk to the clients that were either wanting new software or wanting existing software modified, and I would say, what do you need done and why do you need it done? I didn't program anything. I would write up the requirements, give them to the developer. The developer says, yeah, I think I know how to do this, blah, blah, blah. It's like, oh, I can't do that. Can you go back? And then it would be a bunch of back and forth. I theoretically spoke both developer and client, like regular people. Um, and obviously, I'm a communicator for better or for worse. Uh, so problems. Um, I kind of thought IT was kind of, and in no particular order. It's kind of funny. uh, The IT seem to be, or maybe work in general, seems like the army. The people making the decisions aren't the ones that are having to implement anything. So you would have somebody way up here saying, "Yeah, we need that this month," and it would come down, and it would be people like me who would be implementing that. And it's like, okay, this is either going to suck, it's going to be full of bugs, or it's going to be late, or it's going to be over budget, or it's going to be something wrong with it. um, but the person making that decision, like, they're not going to be working the 12-hour days. So that was one problem, kind of separation of decision making from implementation. And then the people they spoke to didn't push back to them, and it would end up being the people at the bottom. Second problem would probably be just people. There were some people that are just really hard to work with, whether bad communicators or just a-holes. Forgive the not quite a swear. um, I mean, people cause a lot of problems. My job would have been great without people, but I sort of need them to give me the information, right? Maybe people who didn't have time or who didn't give what I was doing high priority. I wrote tons of documents that nobody read. They signed off on them for some reason and just sort of trusted me. And then if if something were to go wrong, then it'd be like, yeah, it was him, right? And if I did something wrong, then the developer did the wrong thing, the tester did the wrong thing, tested the wrong thing, and then 6 months later we went ta-da, and it's like, ooh, that's not doing what I was thinking. That didn't really happen, at least not to a significant level, but it was definitely the stress part of the job. So, anywho, good question. Yeah, I would encourage everybody, if you're not investing, start investing. If doing simple exchange traded funds, you can get sample portfolios everywhere. You can borrow my TFSA from my portfolio. Um, Canadian Couch Potato has some. I'm just Googling stuff. One of the people I'm mentoring suggested something that Interactive Brokers gave her. There's also all-in-one ETFs. You don't have control, but if you don't want it, then it's fine. Just set it up and on a monthly basis have the brokerage take money out of your checking account, invest it. You can spend the rest, whatever you want. If you're investing 10% of your gross income, you're going to retire at 65. If you're investing 50% of your 50 of your income, you're going to retire in 10 years, give or take. Um, it all depends on what you want from life as far as the like even if you don't want to retire, just having options, having financial independence is the way to go, right? Like if you love your career but don't like your particular job, you can quit on the spot, and you can take 2 months to find the next job, and you're absolutely fine. Um, I mean, an emergency fund would do that as well, but so I would encourage everybody um, to start investing, invest early. I think as soon as you're 18, you can get an account. You start building up TFSA room. The sooner you do it, the better, and you let time do the heavy lifting on your portfolio. So, anywho, I've been at it for 2 hours and 40 minutes. So if there's any last questions, otherwise I'm going to call it a day. The doggo's been sleeping the entire time. Um, any last questions? Again, I'm going to do this again in 2 weeks. And next week, same Wednesday, 6 Pacific, 9 Eastern. I'm going to be on TikTok. I kind of alternate them. I'm curious what will happen with TikTok as well. With the banning in the US, it won't really affect me, but curious. Right? Any last questions? Whenever I'm signing off, I always see somebody else drop in, and I feel feel I'm gonna shut it down on them. But yeah, anything with personal finance, investing, financial independence. Anybody texting madly or? Oh, there's Brian. And thank you, Frankie. I think if you're still on, thank you for the McHugh. And I'll have to check my notebook to see if it was on my list or not. And again, if you're interested in just hanging out with a bunch of like-minded people once a month, or well, as frequently as you want, right? Meaning less than once per month. Reach out to me. We can get you in a very exclusive club. Brian says, "What do you think of the idea of Bill Ackerman's idea for every American to get a certain amount of money in the S&P at birth in order for all citizens to be aware of the market and participate in the above?" Bill has interesting ideas. I know he's a bit of a bit of an interesting fella. I watched some of his videos. I think he has like a course as well. Yeah, it's a question of implementing it. Like the money would have to come out of somewhere, so whether out of old age security or something. I mean, the other thing is you also get somebody who turns 18 and is like, I want a motorcycle, and just sells the whole thing, and maybe didn't pay any attention to it up until then. So I mean, but yeah, once you're involved, I mean, I don't have kids, so I'm not the one to talk about this. But as far as what I've read about teaching your kids, you're supposed to buy them stock that they identify with or that they're familiar with. So Disney, Netflix, whatever it is, Ford, GM. Um, so that way they sort of become involved and learn about it and show an interest, right? So that's sort of in that vein. Yeah, I don't see why not. It's just where do you get the money from and how much? Um, for him, he's just wanting extra buyers because they drive the price up, right? I mean, it could be somewhat self-serving. Um, I think going to back to the earlier point, um, just getting financial education, because it's not just about investing. Like new car leasing versus used car, uh, variable versus fixed rate mortgage, universal life insurance versus term life. This is stuff that having a bit of S&P 500 doesn't doesn't do for you. Budgeting, like all of these topics, credit cards, you know, like you like the typical. I know I said I'd go off, but anyway, like the typical kind of life progression, right? Let's say you go to university, you get student debt, you get a couple of credit cards on campus, for students, and I think they're a little bit more careful with them now, but probably not much. I think the growth mindset would be invaluable. Yeah, for sure. Like just investing in general, right? If nothing else, it would appreciate for them. But some people would just think, hey, this is like, my bar mitzvah bonds. It's like I'm gonna cash them in as soon as I can. Like, it may not appreciate much, but like some will take interest. It'll be better than nothing. My point is, you know, uh, like people don't know about credit cards, and they don't, whether they don't realize that they actually have to pay the stuff off, or whether it just makes them spend more. But so in your 20s, you're getting your first job, you're paying off the student loans, you're paying off possibly the credit cards. In your 30s, you're settling down. Now you're buying a house, you're buying a car, your better car maybe. You might have kids. All of that stuff costs a ton of money, so you're still not putting anything away. Then you're in your 40s, you're still paying off the mortgage. Now you're paying for the kids' college. And then finally in your 50s, maybe the kids are out of the house, mortgage is paid off, your house is your biggest asset. And now you basically have 10, 15 years, maybe five, Freedom 55, those of you who remember the old, I think it was Fidelity commercial. Um, the you have 10, 15 years to save for your retirement. Now, if you've been climbing the corporate ladder, you have seniority. If it's not a corporation or whatever, you're making a lot of money, the most money you're going to be making. If you really buckle down, you can do it. You can save something. Plus, if you've been paying into CPP, maybe you have a defined benefit pension. One of my friends, who back then was in his late 50s, knew he had some kind of pension at work. He worked cutting metal in a warehouse or factory, but he could not tell me whether he had defined benefit pension or defined contribution. And I said, does it tell you how much they're going to be paying you per month, or does it tell you that you have 100,000 with them? And he says, it tells me I have 100,000. I'm like, well, you have defined contribution. That's all you have. If it goes down, the company doesn't have to do anything. He didn't know. And that was what he was depending on. Like, I find this so scary. That was what he was depending on. I tried to help him. He just showed absolutely zero interest. Yeah, can lead a horse to water. Anyway, so my point is that if you started investing in your 20s, along the way you would have had a lot more options and a lot more freedom thanks to that money. But yeah, you could buckle down at 50 and invest half your earnings at that point, and have something decent for retirement. But you didn't have to. And if people learn that very early on, um, that would have done well. Anyway, Brian says also participation in success of a nation. Yeah, yeah, fair enough. Um, whether you want to rank the S&P 500 as a success, or GDP, or we have the biggest guns is a different different question. But fair enough. You could interpret the stock market as the success of the the nation. Cool, cool. Okay, that was fun, guys. I'm gonna call it a night. Um, Again, I'll be on YouTube in a couple of weeks, on TikTok in a week. Uh, Check out CanadianMoneyTalk.ca. There's all sorts of interesting things on there, including painstakingly hours and hours of work, research of what kind of dividends or distributions do Canadian companies pay, which is interesting. If you have dividend payers like me that are Canadian and you have them in a non-registered account, um, what kind of dividends does the company pay? So some of the REITs, for example, they're not paying necessarily Canadian eligible dividends. They could be paying you capital gains. It could be foreign business income. It could be all sorts of stuff. And in non-registered, it matters how that's taxed. So that's also on CanadianMoneyTalk.ca. I think there's education and resources and education, and one of the links on that page is a list of Canadian dividend payers or distributions. So if you're interested. Cool. All right, you guys have a good night. I will see you all in a couple of weeks. Bye.